but I invested way more time into Nine Dragons back in the day, so feel I can do it a bit more justice. Released in 2009, this is one of the more obscure MMOs on the list. Nine Dragons had 9 distinct clans that you could join, and learn faction-specific kung fu, each with their own quirky aesthetic that made every one of your characters feel genuinely unique to play. A nice additional touch is that all the kung fu moves shown in the original trailers could be learned in-game. You could also reach the level cap not choosing a clan at all. Similar to maxing out a faction-neutral Pandaren in World of Warcraft, Nine Dragons players could reach the level cap as a vagabond. The game had a unique, interactive skill system, where you would actually level up individual skills by using them, and as you used them, you would unlock additional movesets within the skill, increasing its damage potential and producing flashy combos. Something else both weird and great about this game was running. Yes, you heard that right, running. You could get Kung Fu tomes to level up your Lightfoot ability, making you faster
It's okay,
and
we'll
faster
just
at
keep
traveling
spamming you.
until you could blitz around the maps in no time at all. Players could also enroll as a student of higher level players, gaining additional bonuses to help. Number 2 as a representative of the WoW clone era. Once upon a time, MMOs took the easier route of copying the success of WoW, rather than trying to make, especially in Russia. First off, the game had a handful of unique races and classes that really made it stand apart, particularly the Gibberlings, as you would have 3 characters you controlled as a unit, and the Arisen, that have one of the coolest racial aesthetics to grace not only MMOs but games in general. Without a doubt, the most important feature of Allods Online that really made it special was the Astral. This was an endgame feature that would let players adventure out into a visually stimulating and very dangerous astral realm that could only be navigated by a group of players on an astral. So this final spot on the list was a really difficult one for me, and ultimately ended up being a tussle between Lineage 2 and Ion. Both of them were excellent games for their time, but I was more involved with Ion during its early stages and thus have a personal bias. Lineage 2 fans, please don't at me. Released in 2008 and made free to play in 2012,
Hello everyone, it's Game Citizen and today we're gonna talk about nice questions there for them. So one of them was like, oh, it was more interesting. So this one is saying like, okay, the game's old, it's been 20 years old, the system is piling up too many things, some parts are starting to get difficult to maintain. I have no idea what are these systems that are difficult to maintain now. And continue the service for next 5, 10, 20 years. Because yeah, they can see that they have base, it's very stable, they have
You're gonna fucking kill me. What the fuck?
Raise that bow at me, boy.
Hey, bro. I didn't do anything.
Anyway,
Raise that bow at me.
Okay, I'll put my head down.
Raise that bow at me, boy. What are you doing? Put that bow down, boy.
It's not even out.
Yeah, boy. Weapon down, boy.
Right, on paper, it should be international. It was at the very beginning. However you want to pronounce it, is international Ragnarok Online. But it's not international because it's regional. For instance,
oh, gee, I want
you. You're alone with a flamethrower, huh? Yeah, you better run away. You better stay away from my water. Don't be getting close to my water, boy. You better stay on that. You better stay in that little low point over there. Don't come up on my hill. You have any food?
I mean, what's the future of Ragnarok?
Motherfucker starving.
That's the future. And this game will die when all
Can a
the
motherfucker
panic
eat,
of people
please?
don't play the game anymore. That's the truth. So it's
I
not
just
because
want
of
a little
gravity,
Ethiopian
it's
African meal, man.
they
That's it.
operate in the stock market.
I got you some
And
steak,
because
my
of
boy.
that, by law, if
Steak,
you know,
Ethiopian
hold
sheesh.
kings.
shares in stock market, they need to show lots of documents.
Ethiopian
So you can
titties.
assess them in the
Oh
US
my God.
Securities and
What did you
Exchange
say?
Commission.
Who did you say
I will
that,
put the
David?
link down below.
I thought that's
And
what you said.
he'll talk about
Sir,
everything.
doing Bible study.
So
Okay,
when
thank
they
you very
end
much.
the year, the fiscal year,
Bible
they talk
study.
about this game. And in there, they show
Standing
that
Indian
like
food.
Ragnarok Online Classic
The Ethiopians
represents
do Bible
between
study. I will give you that.
17.4%, between 17 and 20.8% of the total revenues
The
that they
Mormons
got
do,
in
really?
2021 and 2020.
I didn't know
So
that.
that's
I have
like
I
one
thought they
thing.
would be like,
So clearly, Ragnarok Online
oh yeah,
Classic, the PC version,
they do a
is
lot
not their
of
main product.
mission
Most of the money they got
time.
from mobile games. 75% came from mobile games. Which, by the way, of this, 25% of their
That
total
shit rotten, my boy?
27%
Motherfucker just said he had food and gave me some rotten ass meat.
27% was from Eternal Love. And it gave them $94 million. If you see on the document here, it will be written like thousand, but it's because each $1 here represents 1,000, make this easier. So it's actually $94 million that they got with Ragnarok Eternal Love. And you compare it with Ragnarok Classic, it's far less. Now, if they want to make games, most of them with mobile games, and I understand the mobile
Holy
future.
fuck.
Well, then, I mean,
Keep
they
straw.
have a strong IP, but they have been closing private servers. By closing private servers, they're just damaging the IP. That's what's happening. They do not get money out of
Trying to
private
make it more
servers.
fire.
I mean, there are many people playing private servers. Maybe they're losing some money.
Now we lost our
Not
food.
money. They have said that like in 2011, they have closed some private servers and they got $154,000 back. And that's dollars. In this part here, it does not refer to $1 is not 1,000 because they're in a cent. So you know it's $154,000. Now you might think, oh, that's a lot of money. $154,000. That's a lot of money. This is pocket money for the others. It is pocket money. From Ragnarok Online, the classic, the one that we're playing here, the one that my channel is about, with the American server, the IRO, so United States, Canada, they got $2 million just for
Which way is which, Jack? Do you know?
Ragnarok started like any other MMORPG of the time.
that's
It
why I'm
had
waiting
the
for Josh,
Holy
so-
Trinity system, which
Let
is
us-
a division of labor. It was
Buy some shoes right now, man.
Killer and DPS.
Trying to buy some
As
shoes
time
right
went
now,
by,
real quick.
the game extended, and there were more roles.
We had all the time
And
to do
the
it.
game
I'm gonna
mechanics
do it right now.
became more and more interesting, they were more complex. But nowadays,
Yeah,
there
all
is
they
no
do by
Holy
shoes.
Trinity anymore.
Got salty as shit right now.
It was funny as fuck.
Yo, shoes. Oh, God. Alright, Jack, I'm sorry. Alright? Look, I apologize. I'm getting on now, alright?
I think you hurt his feelings a little bit.
Yeah, you did. It's alright. But I guess I'll just stop shopping because
Gotta save your money, bro.
Oh, you're dead. Why are you going down so far? Stay there forever now.
So you see, it's not like there was just one class for each role.
Try to come up.
So deep, bro.
No. Mage was supposed to be one of the highest DPS. Healing the game was not easy. You could use potions, but they could be a bit expensive. And there was a limit weight you could carry. Otherwise, you had to sit and wait to recover the HP bar. I mean, does anyone recover HP in the game nowadays? The Swordsman had that. Actually, speeding up HP with recovering while not moving. It's so crazy. Sitting was really a part of the game. And it was a part of the social aspect of the game. And it's interesting.
No.
What are you doing over there? Thought you were safe, huh?
But not the rules. Also,
Right.
act like to the fly here for undead. So that was a way for them to weekend. Even the merchant had a skill to deal with damage. But of all classes, the merchant was the most independent. Especially when you could use the map as a natural barrier. Sometimes you could place yourself like
Is that parkour right there, man?
and this was really nice because then you could kill from afar. The problem is when the motor would drop something and then you have to run down to get it, like some time. And then there were the second classes. The two middle classes didn't change much the main characteristics of the first classes. The swordsman
No, he got
which
me.
is a better tank or better
Too slow.
the archer becomes
Too slow. Too slow.
being able to use trap, which makes them even more effective. The archer was already
Too slow.
even more
Too slow. Ah, no.
Oh no. Why did my guy throw it?
Yeah,
It's under the water, bro. I can't get it. It's right here. You see it? Do they run out that quick? He just chunks it when he's done with it.
I need water.
You have soda? No, I have soda.
Want to try to go find a way out?
The class focus on DPS.
Do we go out or go deeper? I feel like going out is just right behind us here.
Rogue is one of the favorite classes. You can use a bow, you can use a knife. Rogue has the skill haggle, which, I mean, no one is point to that skill, but it makes so much sense as a rogue, the story of the world. You get a better discount from buying from any PCs. It's even better than the merchant class. It's 1% better. The rogue had skills to strip other players from their equipment, so they were quite useful for blacksmith and alchemist. As in Ragnarok collapsed into that was about bad many years ago. People who play Ragnarok are older now. I'm talking about you and me.
Today was so slow and so choppy, but today I'm going to show you guys how to be disciplined and how to be patient on days like today. And here is a live trading video. You think I traded during this price action? This price action was terrible. Again, I only trade during the best times in the market. We're going to go over my game plan for today, but I was not able to execute anything because the price action was not there. That's the last part of my execution plan. Was price action has to be in our favor. It has to be nice and aggressive, and it wasn't. Today are test days, and a test will tell you one or two things. It will tell you that you passed the middle of material, or it will tell you stuff that you need to work on. Days like today are that. It will tell you what you need to work on, or if you passed on a day like today. And I pat myself on the back because I passed on a day like today. I didn't take no trades today. There was one setup that I actually missed that looked very nice, and we're going to get into it right now. Alright, so now let's go into the reason why I was kind of hesitant of even trading today, just because I saw how the market was. Number one, we put all my downside levels on fire. I was looking at that 400 level on SPY. This thing broke pre-market at 398. It would look a lot nicer if it had come all the way back up. The news came out at 8:30, came all the way back up. And it was just looking so choppy, and I know FOMC is tomorrow. And price action yesterday was kind of slow as well. So I was like, alright, today Make sure you guys are extra patient. It's choppy, it's choppy, so just wait. Next thing you know, we literally get this dollar range. This thing out of nowhere broke 401. I can't take something when it goes from 401.10 to 400.9 without any velocity on the bridge. You guys were watching that, there was no velocity on the bridge whatsoever. Came right back up to this high day, stopped at 406. So I was looking at that 401 to the downside, 402 to the upside. Next thing you know, we come down, right back up, come down again, come right back up. 401, like what is that? It's too weird. It's aggressive in different directions. It's not aggressive enough in different directions. Next thing you know, this bridge 402. I didn't take it. I didn't like this price action. This price action was not clean at all. It didn't look good. And I don't want to risk my capital. People that have a smaller account size, maybe $200, they're going to take whatever because that's the reason why they have such a small account. They're taking whatever trades. They don't care. If it works out, they're like, let's go, and they'll get to the next trade, and it won't work out. But you have to think about it from a long-term perspective. If I know the price action is 100%. Not aggressive. I have a smaller chance of making money on this trade and this trade actually working out than I usually do. Why am I getting into this trade? So I was like, you know what? I don't care. This thing could jump up $1. As long as I stuck to my plan, I'm fine. So I didn't get in at 402. This thing literally came up 10 cents, 20 cents, came right back down. Whatever. Then it came right back up, came right back down. I don't want to trade doing that. So then I was looking at that 401. Number one, if you guys been following this channel for more than a week, you guys know I'm not taking a trade if it's a 5th red candle in a row. And it came down a whole $1, and price action today was so choppy. It'd be different if this thing came down 5 candles in a row and price action was the cleanest price action yet. It's super aggressive. But today's price action
well, you discouraged me from getting
Number two, look at this wick. Just for it to come right back down.
Get on the game. Yeah.
I don't want to trade this. So then I was looking
want
at
to shit
the
on?
low day. Like, okay, maybe this low day.
That was the most aggressive he's ever gotten with me. Scared the shit out of me. Alright, hold on.
A whole $1. It needed to cool off.
I mean, 126.
Lowest possible point out of this candle. And then it looks like sellers really exhausted themselves.
Well, send me a limb by, please.
Whole red candle. Literally, we didn't see a red candle for like 10 candles in a row, 8 candles in a row. So it's like this price action was terrible.
Thank you.
I was looking at potentially this 403. Next thing you know, we slowly come up. And here's the problem. Now, to be 100% transparent, I think SPY definitely messed up my trading possibilities today. Because I was looking at Tesla, and I was looking at that 171 break. I was potentially looking at that 170 break, but the way that it came up so fast and so aggressive, $4 upside without any sort of cool off. I just wanted to give it a second at that 170, and then it broke without me, which is cool. But then it set up at 171, and this set up so nice. Now, the problem was I was also looking at that 403 on SPY. Now, what my plan was to take 403 for a quick scalp and then switch right over to Tesla and catch the 171 break. Because SPY, percentage-wise, will move a lot more because of DTE versus a 4 DTE. And I saw Tesla kind of holding around the lower 170 mark. Well, SPY goes to this 403 mark and kind of rejects the top of that 403.
Of what?
It started rejecting, okay? While I was looking at SPY rejecting 403, so I was about to enter 403, I look at Tesla, and this thing's at 171.10. I was really waiting for that 171 break, and I can't even blame SPY because I was looking at that 403 break, but I should have paid more attention to that Tesla. Because out of nowhere, this thing got really aggressive. It went to 170.50s. I saw SPY get into that 403, so I was like, all right, 403's right here. I'm going to hit this and then go right to Tesla. Next thing you know, this thing got aggressive very quickly. Broke 171. I look over after SPY rejected that 403. It's breaking at 171. And I can't chase it. Even though it was 10 cents above where I would have entered, I can't chase it. I had to stick to my rules that I couldn't enter that. It's super hard to not enter something that you've been waiting so long for. But that's what's kept me here today. It does suck. That was a whole $1.50 move just off those 4 candles alone. But I had to stick to my plan. It was very hard to not get in that trade. You need discipline, but it's just subconsciously you're going to be disciplined already. Like I wasn't ready to enter this at the 10s, or it's so hard not to enter this. It was like I was fine, even though it sucked that it broke that level. I was more mad that I missed it than me trying to chase it or FOMO into it. I was mad that I missed it. That's all. But it moved without me, and that's all right. It's not gonna move without me tomorrow. I'm gonna be
Ah,
ready to
yes,
Tesla
this
tomorrow
place.
because
Come here.
Closer is
Follow,
really
follow, follow. There's
If you guys
something
found some value in
here
this
we
video, if you
need.
guys did,
Right here.
drop me a comment down below if you guys really enjoy these types of videos, and I'll see you guys tomorrow.
Grab it.
Can't grab anything.
Do I have it maybe?
Honestly,
Right
today
here,
was
up
not
here.
a bad day for a Monday and for F1C. You
all
guys
this
about to watch
dynamite,
it
bro.
live. You
Fuck.
guys already see this in the video trade right here.
What is
I'm
that?
gonna go over everything, and you guys about to watch it live right now.
I got an axe.
In it,
Oh,
yep,
this
in
axe.
advance.
I'm looking at the
Axe,
175 clips.
that
Oh my
is.
gosh, bro. They are so expensive now. Amazing. There's 165,000 wall at 175. This is insane. Tesla's about to hit. It's pretty crazy that I can still read this.
This is the dynamite cave.
Like that. I need Tesla push, by the way.
Now we know where to come get it.
Make a thing for it.
Did you guys grab the arrows too?
3% I'm thinking about
They're over here. They're little stacks of arrows.
sold in the 174s.
You got paint?
Contracts are not moving. They're like 3%. I want to see if we get pre-market low. Stop loss for the rest of the contracts is break even for these 175s. Contracts are moving. $1 drop and they're up 3%. Stop loss for break even. We're still able to execute this approach.
Trying to find my arrows.
50s, 40s. I'm gonna try and sell all under pre-market low. There it goes. Pre-market low. 173. All out right here. Selling. Sold. Nice. $2 drop on this Tesla. They're at
Don't they
403.
now?
I don't know actually. Now I really don't know. Well, maybe up this way. Oh yeah, this way.
What about this hole right here? What is this hole?
That's oh yeah, it is a hole. I think we've already been down this way.
I'm thinking about 75% off here. 90s. They're just holding this area so much. See, like, look how it's holding.
At this point, we just need to get out.
Stop loss to break in the rest of the contracts. Let's see if it
Get out.
70s, 80s.
Cave on the way.
Got the rest just to wait till, stop loss to break in the rest. Got 20% left. Keep in the zone. cap these contracts.
There we go.
How much did your contracts move? Remember stop loss breaking on the rest of these contracts. I'm just waiting for that lower
The
day.
daytime.
I don't think the natives will attack us if we have this paint on.
Just need to slip it. 60.
What paint on?
See how we're painted?
Oh. What the hell?
Yeah.
Yeah, why?
Painted? What do you mean?
Gosh, no
Hey,
way.
look, I'm red now.
Yeah, they're all at that. They're all at that lower day area.
Oh,
Yeah.
skin tone is like weird, yeah.
It went to 70s and then right back up in the 80s.
Why
I still
would
got
we
my
put
stop loss
this
to
paint
break
in?
even.
Oh, because we got this red
It's
paint.
very-
Okay. The red skin.
Thank you, needs a slip.
We need to start walking the map so it can draw itself.
They're gonna attack us still?
About to find out right now.
I think he gets out of that zone somewhere. Dude, what are they doing here? It's like there's news or something. Bro, it's just bouncing. Oh my gosh, what are you doing? Give us lower day, nice. There we go. Nice. All out there. So down. Let them know
I'll
how
go
we
through
are.
the water.
Make sure y'all spam fire emojis in the trading chat. Y'all did good today. Let them know how we did. Let them know how we did. This is every single day. Every single day. Alright, so now let's go into every single thing that I was looking at. Number one, we had this zone on NQ. This was the main reason why I was really looking at that 403 break on SPY. I wanted to take it into the zone, and this is also the reason why I held SPY. If we take a look at SPY right now, we can see this 403. I was planning on taking this to the downside, but we did gap overnight under that 403, so it was invalid. Then we came up and we retested 403 exactly. It reacted enough to where I liked 403 back down to the downside. Upside was a little choppy, so I was like, I'm not going to really play this. And then we saw that 405 was not respected as a key level, and it just came up. So
Am I
my
going to the
upside
wrong
trades,
house?
I just didn't like the SPY to the upside whatsoever.
No?
Then it started coming
The house
down.
is over
We
here.
got in at
Mhm.
that 403 mark,
Where
and
am
then
I
it
going?
bounced right back up. I had a nice stop on this. My stop loss on this is going to be in the 20s, so the low of this candle right there.
I'm home,
If it
I
came
don't know
above
about
that,
you.
then I was going to get out. But this was very aggressive in the
There's a
10s
bunch of
to the
faggots here,
downside. I
too.
saw sellers really take this to the downside in the 10s. It
They're
looked
kind of
very
far
nice.
away. I'm just
Came
gonna run
right back
outside.
down. I took about 75% off in that 90s area just because it was holding that area a little bit too much. So I wanted to take some risk off the table, so I was clear-minded that whole entire time. Then we made a new low in the 0.80s. That's when I sold another 15%. So I only had 10% left, waiting for that low day. And you guys saw the price action there. It was so aggressive for no reason, back and forth, but I stayed true to my plan. I waited for either low day or my stop loss to break even. Next thing you know, we pushed down to that low day, and I just got out. That was part of my plan. I don't care if it kept going. That was my plan. That 403 break was already enough. That was just ridiculous, but that was a nice
There's a
trade
fat
overall.
one over there,
And
huh?
the reason why I wanted to stay in longer, and the reason why I did not
Say
get
hi.
faked out or anything like that.
Yeah, I'm
was
gonna go toss a
NQ.
stick of
I
dynamite
like the
at
look
it.
at this correlation. If you guys can see the same exact time, NQ went inside our zone and reacted at the top. This looked bearish. This looked like a little H that I
Oh,
always
yeah,
fucked
I
up.
hit him.
They were reacting at the top of this. It was rejecting
They're
that
attacking
area,
you,
which
bro.
made me make that even longer, and it looked very weak. I had the market context there, then we pushed. That's when I sold. And then you guys can see literally the lower day is around the low of our zone right there, 11,983. And I pulled these all the night before, and it's not like we make these zones during the day. We literally made the zone the night before. Now in Tesla, we literally took this off the first 5 minutes, which is insane. We came up, I was looking at that 181. 180 potentially because I had a huge fall around 160,000 shares, but I was really looking
Who
at
just
that
blew me the fuck
181.
up?
And then we rejected
blew
that area
him
of
the fuck
180,
up.
so I was like, okay,
Dude,
this is
where'd you-
really
oh.
good for like a potential
I
180.
was
So
like,
because of
bro.
the size of the wall
I
there.
was like, no.
Then we started
Hey,
coming down
you.
aggressively.
You
Trying to
split them
get
into
rid of
pieces, bro.
One hell.
I get in at 175 on that break.
Where'd the other
Where
guy
the
at?
fat one go?
You
Yeah,
know,
he
again,
ran
it's a
off.
Monday, but contracts aren't gonna really move like that.
So if I
I
blew
don't
him
really
in pieces,
care
you can't
just
use that
because
body
if
part?
I'm wrong on this trade, I'll
No.
lose like 1%. If I'm right on this trade, I might make 5% or something on a Monday. It's all about just executing good trades. You know, I'm still
There'll
up
be more.
5% on my position size,
That's for sure.
and I'm executing great trades. So that's all I really care about, honestly. And then we dropped under that 174. That's when I took 75% out. And then, next thing you know, when we broke under pre-market low, I saw it holding under that pre-market low. As long as it held under that pre-market low, I was going to stay in. My initial intention was to sell right under that pre-market low, but I saw there was a nice wall at that 173, so I wanted to see if it was going to break that 173 and then I would get fully out. Or else, you know, if it came under that pre-market low and then came right back above it, I was just going to get out. It did have a good job of actually holding under pre-market low, which made me stay in it a little bit longer and just wait for that 173 break. And 173 broke, that's when I fully sold. And you guys can see that literally was such a perfect sell on that. Look at that. And I still can't get over it. That was a perfect sell. Look at how it came right back up. This was literally the perfect sell there. Now in the video, I was watching this 198 level, and pre-market low was around that 198, which just made it look even nicer. But it's NVIDIA, and it's a Monday.
some blueberries.
You get in at this 198. It comes down about 20 cents. Contracts move a percent, not even. I wasn't able to sell. So then it started literally gapped right back up, and as soon as I saw that gap right back up, I'm like, all right, I'm fully out of that. So then I got out.
Gotta
at
make a little
198.
garden bed.
Literally made
Right here. Oh, what the
0.17%.
fuck?
If you're in the chat room, you guys saw the screenshot.
Oh, no.
0.17%. I'm up $10
I had shit
on
planted
video.
already too.
But
that
again,
phone,
I
bro?
executed that very well. My plan was to take it under 198. I took it under 198. It came down, came right back up. I reacted. Got out as soon as I saw that, as it's just not worth it. So those were the 3 trades that I took today. See you guys tomorrow. Hey you, yes you. Listen, if you guys are not in my Discord chat room where I live trade every single morning, post all the zones, all the key levels, everything that I'm looking at for the day, post 3 to 5 lessons per week to teach you guys the exact strategy that I use that allows me to consistently bank and buy every single day. That has helped thousands and thousands of students become profitable traders around the world. We got people in the UK, people in Canada, people in the United States. The best part is that you guys can join this chat room as well. All you guys have to do is click the link in the bio, or you guys...
You real quick, please protect me.
What's going on, guys? Joshua here. So in today's video, I got a really good one for you. We're going over the 6 best monthly dividend ETFs. That's right. The ETFs on this list don't pay dividends every quarter. They pay dividends every single month. And so I picked out 6 of the best ones, in my opinion, that will pay you the highest dividends so that you can get the most bang for your buck. So let's go ahead and not waste any more time. Starting at number 6 is DHS, or the Wisdom Tree US High Dividend Fund. This ETF seeks to track the investment results of high dividend yielding companies in the US stock market. So in other words, you don't have to waste your time anymore going out and researching and trying to find the highest dividend paying stocks, because this ETF already does that for you. So by purchasing shares of this ETF, you're automatically giving your portfolio targeted exposure to the highest dividend paying stocks in the US stock market. For example, out of the 315 stocks that this ETF currently holds, some of its top holdings include companies that you'll likely recognize, such as Pfizer, Cisco, Verizon, AT&T, and Coca-Cola. And because this ETF holds some pretty solid companies, it also means that the performance is also pretty good. Over the past 10 years, DHS has given an average annual return of about 11.57%. This means that if you would have invested $10,000 into this ETF 10 years ago, your investment would have grown close to $30,000. And that's on top of the high dividend yield that this ETF offers, which comes in at a 3.77%. Now, for an ETF that pays a dividend this high, and this is not even the highest on this list, we'll go over some others that pay even better, but for an ETF that pays a dividend even over 2%, it's really surprising to see that it's grown this much over the past 10 years. Now, you may be thinking to yourself, Joshua, a 3.77% dividend yield is not that impressive, right? I've got stocks in my portfolio that pay as high as an 8% dividend yield. So, for example, you could go with a stock like National Presto Industries, which has a 7.4% 2.48% dividend yield. And while yes, that dividend is certainly pretty mouthwatering, the growth of this stock has been extremely depressing as told by the 5-year chart here. And this is a classic example of a value trap, or it can also be called a dividend trap, where the dividend yield is super high, but the stock or the ETF is actually losing value over time. But enough of all that. Let's go ahead and talk about the risk level of DHS as well as the expense ratio. On a scale of 1 to 5, with 1 being the least risky and 5 being the most risky, I'm going to give this ETF a 3. And then in terms of the expense ratio, it's not like the cheapest ETF in the world, but it's also not the most expensive. With an expense ratio of 0.3%, you can expect to pay $38 per year on $10,000 invested. Generally speaking, I would say that anything that falls below a 0.5% expense ratio would be considered a cheaper ETF, whereas anything above that would be on the more expensive side. So DHS falls under 0.5%, so it's a little bit cheaper though. DHS is a fantastic monthly dividend ETF, and I think it's a really good choice for any income investors. However, it is only number 6 on the list, which means we have 5 others to go over, and theoretically it can only go uphill from here, so let's keep on high dividend, low volatility ETF. SPG is which is an index that measures the performance of the 50 least volatile high dividend yield stocks in the S&P 500. Iron Mountain, ExxonMobil, and some other potentially less familiar companies. This ETF was founded in 2012, which means that we can't actually look at the 10-year performance of the ETF. However, since its inception, you can see that this ETF has had a yearly return of about 11.03%, which means that $10,000 invested back in 2012 would be worth a little bit over $23,000. Considering that this is a high dividend ETF, to see that
I haven't seen this guy before.
Yeah. Will tell you a monthly dividend of 3.86%. And by the way, if you aren't completely familiar with what the dividend yield means and how that translates into money into your pocket, I'll explain that a little bit later in the video. So make sure you stick around and watch until the end so that you can see what that means. Morningstar rates the ETF as a 3 on the risk scale, and considering that three is fair rate. The expense ratio comes in at a 0.30%, which means you'll be paying $30 per year on $10,000 invested. If you are an income investor or somebody who's looking to potentially live off of your dividend payments, then SPHD is without a doubt a really solid option for you. However, so are the other 4 on this list. Next up at number 4 is PGX, or the Invesco Preferred ETF. PGX seeks to track the performance of the ICE Bulk AML Core Plus Fixed Rate Preferred Securities Index. You know, I sometimes wonder who comes up with the names of these indexes and if there is any way that you could make the name a little bit more creative. But in any case, this ETF is a market cap weighted index designed to measure the total return performance of the fixed rate US dollar denominated preferred securities market. Now that sounds pretty dang confusing, but it basically just means that PGX only invests in shares of preferred stock. Preferred shares are a special type of stock that pay a set scheduled dividend that's very similar to a bond. However, they're unique from bonds in that by owning shares of a preferred stock, you still have ownership of or part ownership of the company, whereas with bonds you don't. Preferred shares of stock are also known for paying out higher dividend yields when compared to common shares of stock, which is what like 99% of retail investors invest in when they're investing in the stock market. PGX currently holds 301 preferred share issues with top holdings in Citigroup,
What is this baby ass bed?
Wells Fargo, and many others. Over the past 10 years, PGX has returned about 6.73% per year. This means that $10,000 invested into this ETF 10 years ago would be close to $19,000 today. And on top of that, you'll also earn a dividend yield of about 4.87%. The expense ratio on PGX is slightly higher, coming in at a 0.52%, which means that you'll pay $52 per year on $10,000 invested. And because this ETF invests in only preferred shares of stock, it does carry a little bit less risk and therefore comes in at a 3 on the risk scale. All right, moving right along, at number 3, we've got DIV, or the Global X Super Dividend US ETF.
recyclable just like paper. More wallpaperable. Mentos, yes to fresh.
Very similar to the number 5 ETF on this list. The only difference between number 5 and this one is that this one, DIV, invests in low volatility and high dividend paying stocks within the entire US stock market instead of just the S&P 500. DIV holds 50 of the highest dividend yielding stocks in the US, with top holdings in CubeSmart, Public Storage, Pfizer, and others. This ETF was founded in 2013, which means it's relatively new, and so we can't actually track the 10-year performance of it yet. However, since its inception in 2013, it's given an average annual return of about 4.67%. And while the growth of this ETF is
just put the seed.
what it lacks in performance, it makes up for in its high dividend yield. DIV has a dividend yield of 5.80%, which is the highest one on the list so far. But it's also bordering the line of having a high expense ratio coming in at a 0.45%, which means
you go up to it and it'll tell you.
Invested. I think it's a pretty
Gotta be
fair
full of water,
assessment
though.
to say that some of the other ETFs on this list could potentially be better investments when compared to this one. However, the main criteria for ranking these ETFs on this list was the dividend yield. And so the higher the dividend yield, that means the more money in your pocket each month, which for income investors is their primary focus. And so although DIV has a smaller annual return and it also has a higher expense ratio, it also
Come, I know a place to get water.
Is it up here?
What the hell? Taking all the water from the house?
Hey everyone, and welcome back to another video. So if you guys are new to my channel, I would appreciate if you guys can drop
can't
a
fill up
like,
from that
subscribe
thing,
if you guys
can you?
enjoy the content. I'm a beginner myself and I try my
Yep, it's
best
all
to give you
100%
guys
clean
knowledge
water.
of what I've learned, mistakes that I've made.
And the
So
skin?
if you're on the same path
Yeah.
with me,
Mhm.
then you would definitely enjoy my content. I try to keep it nice
I
and
don't know how to
simple
drink
so you
it,
guys
though.
understand. But
I gotta
today,
drink it, though.
basically, what I want
You
to talk
cut,
about
there's
is
none
how to
left.
make money on
Gotta
Webull
take
for
all of it.
beginners. Okay,
Oops.
I did a whole video on Robinhood, how to make money for beginners on Robinhood. And if you guys want to go check that out, the link will be down in the description below. Not only that, but I really want to do Webull because you can also get free stocks. The great thing about this is always getting free stocks, it's free money. So first things first, I'm gonna show you guys, how to use Webull and how do you make money. And if you're a beginner, you want to start making money, that's great. So the first thing that you can do is down in my description below, I always have two links. The first two links. The first one is to if you want to get a free stock for Robinhood,
How do I
which
put-
is down in the description
How
below.
do-
You can use my referral link, and I get a free stock. You get a free stock. And usually when I open mine, I try to do it in videos.
It's
and
gonna
then I
be
show
blocking the
comparison.
rope.
And also, the second link is for Webull, which is a video I'm doing right now for you guys. If you want to get 2 free stocks, all you have to do is literally click on this, sign up with my referral link, you get a free stock, I get a free stock, and on top of that, you get a second stock if you deposit your first $100 on Webull. Okay? So, with that being said, this is such a great way to start. You get free
What you
stocks.
looking at,
Maybe
cracker?
you don't like Webull, or maybe you don't like Robinhood. It's okay. It's free money for you.
Looking like a
You can
bitch.
sell the stocks, and then you could withdraw the money, and you just get free money. The cool part about this is you can get up to $1,400 stock value. So that is
I
really,
just hit it.
cool.
Oh,
So
God,
once again,
no.
both links down in the description below, but for this video's
No,
purpose,
just
we're going to use
kidding.
the second one, okay? Now, with that being said,
Well,
you
alright,
guys
just making
can
sure,
use
Jack.
mobile.
How to make sure.
I love doing desktop because most of the time I'm on my computer, doing work or anything like that. So basically, when you sign up, they have different platforms. Obviously, they have Google Play, Apple Store for Windows, for Macs, and web app. I have the Windows one, but I actually just want to show you guys using the web because it's much faster. So basically, this is it. And don't be afraid, there's a lot of stuff going on in the background. Robinhood is way more simpler, and once again, if you guys want to watch that video, the link will be down in the description below. It's very simple. Webull is a little more, not more advanced, but it just has more features that I like. and that you guys are definitely going to like, but we'll talk about it right now. So let me just take a couple of seconds to explain to you guys how to use it so you guys don't get lost. So right here we have our watch list, and basically it's just like Weibo actually adds some stocks for you that you can watch, but you can get rid of them. For example, let's go over here in the search bar, and it says symbol or name, so a ticker. So let's search up Delta Airlines, okay? We click on it, and as you guys can see right here, it says add to the watch list. So what we're going to do, we're going to click on it,
Ain't no way.
click on it again, and once you see that it's
Yeah,
highlighted,
alright, buddy. We're about to find out if it's free or
and
not.
guess what? Here it is. So basically it adds it for you, and it's really cool because it gives you literally like
Did it
the
destroy
list, how
anything?
many stocks you have, the symbol
Okay,
for
good.
the ticker,
I was getting worried Payne was
the
gonna murk me
movement
right
of
now.
the graph, right? How much is the price after hours, how up, how high it goes,
I gotta go get
the
water.
change, change percentage, when it opens, it closes, the highest, the lowest it's been, the volume.
Fucking
Basically
dry
gives
ass
you
chicken
even more
nuggets over there.
information than what
Made me
Robinhood
thirsty.
has. It gives you, the dividends, which has dividends, the EPS, the dividend
No.
yield, the turnover exchange. So
It
I
was like
really
black
like
meat.
how that works. It gives you a little more information. Now let's say you don't want this one, right? All you have to do, you can just click on my watch list and get rid of it, and that's it. And it's no longer there. But that's basically what it is. Right here you just have different things, the news, which is really cool. Robinhood does have features like that, but it doesn't have it like this where you have it down here and you can see other things. But that's pretty much it. This is just other extra
Polluted
things.
water.
Now if we go to stocks,
Well,
we can see how the graph
it
works. Now in
is what it
Robinhood it's a little more
is.
simpler. Obviously here in Weibo you have a lot more features that I like. For example, we could go over here, drawings, and you could add so many things.
I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like CGI. Oh, don't worry.
Become an agent of innovation with Invesco QQQ. For investing, carefully read and consider fund investment objectives, risks, charges, and expenses. For more prospectus at Invesco.com.
Things. Let's say you want to draw a line or add different things to it. You can do it over here. Indicators. You have different options right here. You have styles. You don't want candlesticks. Okay, you can use area. You can use just a simple line. Just so many things that you can use, and I really like it. Let's see, a hollow candle. And what I like about this is that you can zoom in, to the graph as much as you want. Do you want
That might be the dude, right?
It will show you the graph every single minute. It shows you like every candlestick every single minute. So that's one thing that I really like. You want to click on year, it's gonna show you literally the whole company's graph in a year, which is really cool. This is like 2007 for Delta Airline.
Yeah, there's someone right behind me.
2020. So
dude, that was creepy as shit. Yeah, I just heard breathing behind me. I was like, what the hell?
All you have to do is search up. Let's see, one more. Let's do Boeing. Alright, Boeing. Boom. We can see right here the graph. Okay, we can see how this this company, in the and it keeps going. Actually, 1962, and then all the way to 2020, we can see how this company has grown. And obviously, it dropped because of the whole situation. Over here, we can also see it shows you, all the stocks right here. So all you have to do is search it up. You can literally put anything that you want, any settings that you want. We also have markets. What is markets? It just shows you different types of things like the United
Wait, is that
States.
the flashlight guy?
It shows you like the big ones, the big stocks
Put him
that
down.
we have.
Where you at?
Hong Kong, the global. It
disappeared,
shows you
man.
like the main stocks.
I was gonna cut off his head and grab his flashlight.
Cool, right?
Oh, wait, you can do that?
Screener.
I think so.
Basically, it shows other stocks. You can add your own watch list, and it shows
What's
you
going on?
everything, and it shows you during the day when it's moving. Trade.
He's out of here.
Hey, what's up, YouTube? I'm Zeke, and welcome to the Dream Green Show. Have you ever found yourself having an extra $100 and you ask yourself, how can you turn this extra $100 into $200, into $1,000, maybe $10,000, or even $100,000 just like I have. Well, unfortunately, this is something that they don't teach you in school. And that's kind of messed up because the earlier you start, the easier it is with the method that I'm bringing you guys today. So because of the lack of knowledge, it becomes scary for beginner investors.
Scared money don't make no money.
But in this video, I'm going to simplify the process for you, bring you 3 different ways to invest. And each way that you invest, if the risk is going to go up. So with each risk, the higher the rewards. So the beginner risk might have a lower return. And then the third way will be a much higher risk, but you could double, triple, quadruple your money overnight. So make sure that you guys stick throughout the entire video. So you information, subscribe to the channel because I'm going to give you guys many more ways to make money. Welcome back, dreamers. Let me start off right now by saying if you don't have $100, the best thing that you can do with $100 is online, pick up and read a book, educate yourself, any new information that you
All right, buddies. That is a lot of them.
Oh, the tree house is fucked.
Best thing that you can do right now, if you only have $100, is invest in yourself. But let's say you found yourself watching my video, I taught you guys how you can make extra money, major income from the comfort of your own home with 10 side hustles that you can do from your home. And now you're making an extra $100 per month.
Peyton, what are you doing up there?
Just from your side hustles.
I'm coming with you.
What you guys doing down there is the real question.
I'm just gonna ignore him.
I know you guys are
Don't go away, Jack. Come on,
he's
get up here.
tell me to invest inside the stock market. Yes, that's right, guys. I'm gonna tell you to invest inside the stock market. But
Switch
if you only
whatever's in your hand.
to invest,
I had a
you
hammer
have to
on.
do it every single month because if you only invest $100 in the stock market, it just goes completely insane.
I'm about to light this sucker up right now.
Now you turn your $100 into $200 over the entire year, and that's not really realistic. Let's say the stock market goes up 20%, now you made $20. That's nothing at all. But if you
Oh no!
invest $100 every single month into the stock market, you will become rich over time because of these world's 7th greatest wonder, compound interest. So with the compounding effect, it's like the snowball effect. You start off with a little snowball, you roll it down the hill, and by the time you hit the bottom of the hill, it is a massive big boulder. So that's the same thing that we're gonna do with $100. Over 12 months, 24 months, 36 months, over a couple of years, you're gonna see that $100 every month grow into a big, gigantic snowball. So the first thing that you have to do is just get started. You gotta get your skin in the game just so that you can learn the ins and outs of the stock market, how to buy, how to sell, how to read charts. And yes, you might lose at first and you might win at first, but now that you have skin in the game, you will become a more seasoned investor over time. So even though you're gonna make more money in the future, when you do get that more money, you wanna know exactly how to navigate and move inside the stock market. Before you go in throwing in large lump sums
What
of
the
money,
hell?
with no clue of what you're doing at all.
This is
Once
powder.
you have skin in the game, you can start doing your research on some of your favorite companies, some of your favorite CEOs, do background research on them.
No. Get me out of here.
More fun because now you're on the inside playing the game other than on the outside looking in. And I can tell you guys right now, once you start investing in these companies, the game completely changed because you are now a part owner of these companies and you start to actually move a lot differently. And the stock market
I can't get out.
More exciting once you get your feet wet in the game, once you get some skin in the game. So the best way to get started by investing $100 in the stock market is by opening a Webull account. Now, once you open up your Webull account, you can deposit any amount and receive free stocks. With my link down in the description, if you deposit any amount of money, that's right.
How would you go in there, Jack?
You can receive up to 15 free stocks valued all the way up to around $15,000. That's right. You can deposit 1 penny if you want to, and you'll receive 15 free stocks valued all the way up to $15,000. With those free stocks, you can keep them in the platform and decide to use it, or you can sell those free stocks. You got all of the money, guys. It's literally free money. That link will be down in the description. Also, I have a link in the description to Moomoo. You can sign up with them, deposit $100, and you'll receive 15 free stocks valued all the way up to $30,000 with my special link down in the description to Moomoo. So if you only have $100, You can pick one of those, or you can pick both of those and receive those free stocks. Now that you have your brokerage accounts open, it's time to have fun. And now it's time to start doing research. You can watch any of my videos. You can watch any other videos that's online, any other videos that's on YouTube. There's a ton of free knowledge out there, free information. You can find out anything that you want on the internet for free. It's time for you to do your research and pick out some of your top companies. So now that you picked out your top companies, these are the 3 methods that I use from safe, medium, and dangerous that return me over
You have that thing, don't you?
Since
A bench?
I have a bench.
Option number 1, which is the safest,
You
is
got it
investing
then.
into a low-cost index fund. One of the ones that you guys can invest into is ticker symbol SPY. SPY, it tracks the S&P 500. It's an ETF, exchange traded fund, and it has America's top 500 companies inside of its portfolio. So only this one stock, you're investing into America's top 500 companies in America. So when the market goes up, you're diversified across all 500 companies. You don't have to worry about one company crashing. Let's just say Blockbuster crash. You don't have to worry about losing all of your money because you're diversified across America's top 500 companies. And historically speaking, the S&P 500 goes up around 6 to 8% historically over the last 30 years, guys. So you're going to get your returns. Continually invest into the S&P 500. Now, I know that sounds boring, so this is the way I do it to make investing more fun for me. So if you're looking at SPY right now, as you guys can see, it is well above $100 per share. But on Webull, you can buy fractional shares. You do not have to buy a full share. So if you only want to invest $25 into SPY, you can do that over on Webull and many other brokerage apps. Now, I know this is the boring way of investing. You want to make investing a little bit more fun, so this is what I do. I invest 70% into a low-cost ETF like SPY, and then the other 20% I invest into my favorite stock. That's what I told you guys to do your research on just a second ago. So let's say I love Apple, so I'm going to invest the other $20, the other 20% into Apple. Then I'm going to take the other 10%, the other $10 and invest it into a very risky
What are you gonna
stock,
do for
a
it?
startup company, probably
rack
a
right
penny
here,
stock
trying to make a meat
or
rack.
crypto, and invest it on the app Webull and Moomoo. So I would buy $70 worth of SPY, $20 worth of Apple, and $10 just to make the game fun. It's investing into any cryptocurrency or penny company or
Think
any
that meat
startup
rack gonna
company
save
that's
your
not
life?
mainstream yet, because that $10 can turn into 10, 20, 30x overnight if you pick a winner. And you guys all know how crazy cryptocurrency is. So that is how I make investing more fun, by investing into a safe index fund. My favorite
What
company,
happening,
so
man?
I could just have skin in the game and say, hey, I'm a shareholder of Apple.
I am a free
Apple. I
homie.
own a part of Apple. So when I walk in that store, I look around and act like, yeah, y'all doing real good with my money. Y'all making me money by keeping this store upright and clean. And then the other 10% is into anything risky like cryptocurrency. Method number 2 would be investing for passive income in the form of dividends.
happened to
Now,
this
dividends
treehouse,
is
man? Why
when
did
you
it blow
own a
up?
piece of a company and they pay back to their shareholders dividends every single month or quarter in a way of saying thank you for owning a piece of the company. Here's a little check back in the form of dividends. Do with it what you want. Now, many investors reinvest their dividends back into the company to help it grow so you can make more dividends in the future, but not all companies pay dividends, and the companies that usually pays the highest dividends is REITs, real estate investment trust companies. It's a company that deals with investing to real estate, and by law, REITs are required to pay back 90% of their taxable income back to their investors in the form of dividends. So every month, I'm receiving passive income just from investing $100 into these companies. They're paying me out every single month back. They're sending a check straight to my account. It's gonna hit it, dividends, bam. Now I have more money to spend every single month. And just like that snowball effect, if I keep reinvesting those dividends, I'm gonna get paid out more in the future. This is by far the easiest way of passive income that I have to you guys, and that I have inside of my portfolio. So here are 3 REITs, real estate investment trust, that pays out dividends, that have been paying out dividends for the last 25 years and have increased their dividend payments for the last 25 years, making them dividend aristocrats. The first one is ticker symbol O, Realty Income. Realty Income is a REIT that has tenants like Walgreens, Dollar General, and Dollar Tree. Second one is Exis Property Trust, ticker symbol ESS. Exis owns apartment buildings. Third REIT is FRT. They own shopping centers. Each of these REITs have been paying out dividends for the last 25 years, so now you really don't have to worry about them cutting their dividends. My favorite one of these three is ticker symbol O, Realty Income. That is known in the investor world as the monthly dividend stock. So that's way number 2, which is a little bit more risky than option 1. So now I'm going to bring you guys option number 3, and that is option trading. Now with option trading, a lot of investors out there are not good at trading, but if you are good at reading charts, if you've done research and you know how to swing trade, if you figured out how to option trade, even though 90% of the people that tries trading fail, if you are one of the lucky 10% that are disciplined enough to be good at option trading, and to be good at trading,
Yeah, Josh,
you can easily
headlight guy.
turn $100
Got it
into
open,
$10,000
man.
in no time, and turn that $10,000 into $100,000. The option trading is the buying calls or buying puts. If you buy a call, you're betting that the stock is going to go up, you're going to get paid a boat ton of money. If you buy a put, you're betting that the stock is going to go down, and you're going to make a boatload of money. Options are too confusing to explain in this video. If you want to learn more about options, you can check out this link right there.
No.
Click that and subscribe to this channel, because I'll be talking about options more in the future on this channel. So for beginner investors, if you want to learn option trading, you can lose $100 in a day. You can lose $100 over.
Was an accident.
But at least it's just only
Well,
$100, and now that you have extra
damn.
income, you'll have another $100 next year, because if you option
That was a
trade,
perfect spot too.
you are going to lose your first $100. No doubt about it, until you figure out a plan on how to be a successful trader. But that's it, guys. That's 3 different ways to invest $100. If you had $100, an extra $100 to invest inside the stock market. Remember, if you do have $100, you can use both of those links down in the description and get free stocks that way. That is the easiest way to sign up and get a kind of head start. Even if you don't have $100, you can make a lot more by getting free stocks down in the description. So let me know down in the comment section which option was the best way that fits your investing style. Was it option 1, the very safe way, option 2, the medium way, or was it option 3, all of nothing? Please let me know down in the comment section. I can't wait to see you guys comment. Also, if you want to know anytime I buy and sell stocks, I'm going to leave a link down in the comment section to Patreon. Patreon will take you to my Discord. Inside of the Discord, I post every single time I buy and sell the stocks. I post my option traders, my day traders, my swing traders. And we also have some professional day traders in there that post the option trades in that every single day. And you'll be a part of a community of investors and a community of traders that are just like you. They want to be financially free in the future. So if you want to be a part of a great community like that, please check out the link down in the comment section. But other than that, guys, hit that thumbs up button. It helps out this channel more than you can even imagine. And also subscribe to the channel so you don't miss out on any future videos. And go ahead and check out my Instagram. Things are getting pretty wild over there. But other than that, guys, I'm Zeke.
Bon voyage.
Yeah, well, call me.
Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, I'm going to teach you how to invest in stocks for beginners step by step. So this video is basically going to be a course or a mini course in and of itself, so I highly recommend that you watch it from beginning to end. Whether you're a beginner or even an intermediate trader or a stock investor, you're going to find nuggets of information all throughout this video. If you're not a fan of this kind of setup, or if you like the whiteboard better, the reason I'm doing it this way is because this is going to be a PowerPoint presentation mixed with live trading, mixed with me actually handwriting some stuff on this tablet here. So that's an easier way to teach you, just that way you can see it live and it'll be easier to connect the dots. So let's get right into it. So this presentation here I created, obviously it's presented by me. If you don't know who I am, here's some quick credibility points on me. I've been investing in the stock market for 15 years now. I started when I was 18 years old. I'm 33 at the time of this recording, which is pretty crazy. Time flies. But I started with a Trade King account. So Trade King was acquired by Ally, and I've actually advanced to Vanguard, TD Ameritrade, M1 Finance, Robinhood, Webull. There's a million different brokerages that I have my money on. The reason for that is because I actually review brokerages for both my blog and also for this channel. So I like to have my money in a lot of different places. I actually have a finance degree and an entrepreneurship degree as well. I graduated in December of 2010, literally 10 years ago to the date, which is pretty crazy. Starting to feel old. And I've actually worked in finance and commercial real estate a majority of my career. So I worked at a publicly traded bank as a credit analyst, so basically doing what I do with the stock information or these balance sheets and ratios that I'm going to teach you about. I actually did that as a job. So KeyBank is a publicly traded bank. Working for Milchap on the commercial lending side. They're a publicly traded real estate advisory services firm, and I also worked for a real estate developer for many years. I built homes. That's actually a duplex that I built from the ground up, and done a lot of stuff in real estate. And then finally, I've been providing free value on YouTube since November 2017. super cheap trades. I think it was like $4.95 a trade, and this was 15 years ago. So now it's pretty good. Also, there's low expense ratios for solid investments with index funds, ETFs, through Vanguard and other brokerages, which we're going to talk about later in the video. And then finally, you don't have to be a genius.
This guy sent me way up in the air.
Help you grow your wealth over time, which we will talk about in this video. So let's get right into it. I'm going to give you a little preliminary background, a little bit of analytical background, and then we're going to go into the line of the stock, okay? But before we do that, we don't want to put the cart before the horse. What is stock is simply a share of ownership in a company. So think of each share being a slice of pizza, okay? So when we're buying shares, this gives you equity, aka ownership shares in a company. So let's take an example. We have Microsoft, okay, which everyone is familiar with. They have shares outstanding of 7.56 billion. So you think outstanding are. So their share price, just for easy numbers, I did create this presentation 2 days before. Not be exactly accurate, but I will. now that we understand market cap, you just simply take that 7.56 billion and multiply it by the price of Microsoft, which is $16.02. Make it easier if I have a pointer here. And then you simply get a market cap of $1.633 trillion. Okay, this is important because companies are typically measured by their market cap. Okay, so market cap changes over time because share prices and shares outstanding can change over time. That's like saying, hey, XYZ company went up in price, XYZ company went down in price. That's obviously changing their market cap as time goes on. So why do companies issue stocks? Well, this is simply to raise money for their business. Think of it like this. They are giving out shares of their pie, their equity, that's why stocks are called equities, in order to receive money from the general
Rocks. Those are rocks. He really thought I was gonna lie.
For their business. So this could be used to fund a new product line. It could be used for R&D and research and development. It could be used to invest in the growth of their company. A lot of companies themselves are doing stock buybacks.
No, I got you. What do you mean?
And then you also have paying off debt. Okay. So there is a difference between preferred stock and common stock. So
oh god damn. Alright, last time for sure. Alright.
Why?
I'll make it. I'll make it.
You are the last in line to get paid out.
Hey, you falling asleep on us?
And they have to sell everything that they own. They may be going bankrupt and may not get paid out. It's a rough reality of being a common shareholder. And then also,
how you guys keep breaking this thing, man?
And then when you're thinking of
not me.
a stock,
Jack.
if you're a newbie and you're saying like, hey,
Yeah, just refill that wood pile from the thing outside.
Common shares when you hear that analogy.
Yes, massive.
Statement.
Get to work.
Beat me.
Oh, it's gonna have a whole bone kit now.
So if you remember, we talked about market cap in this example down here.
Not after I'm done smacking him, you won't.
That's pretty much how you
It took me all game to get all this.
Company, okay? So market cap again is just shares outstanding by the share price. So large cap companies are typically 10 billion plus. Okay, these are typically
How you get that?
achieve massive growth due to their size. Think of a huge, well-established company, right? These could be your Johnson and Johnson, your Pfizer's, or these companies that have been around for years. They've pretty much reached their peak, and now they are a huge, large cap company. They have proven track records over many years, and they frequently offer dividends. That's because they want to offer the dividend back to their shareholders as kind of a thank you for being a shareholder in the company.
Speed weapon or damage weapon or damage speed weapon.
You're a landlord and you have a single-family home.
Which one did you do?
You know, the price of the property can go up or down, just like the share price can go up or down. But the tenants in the property are paying you rent every month. That's kind of what a dividend is. Then you have mid-cap stocks, which are 2 billion to 10 billion in market cap. They're not quite large cap. They're not quite big yet. But they also have a more established track record than the small cap stocks. They are also often M&A. Okay, so if you're not familiar with what M&A is, it stands for mergers and acquisitions. These are bigger fish that are eating up the smaller fish.
From Crest Pro Health, it actively rebuilds tooth density to extend the life of teeth.
Either for their staff or their technology or making an exit because the owner just wants to get paid. Then you have small cap stocks, which are $300 million to $2 billion in market cap. These are typically younger and are seeking aggressive growth, and they are typically higher risk and don't usually offer dividends. This is because they are so early on in their journey as a company of going public. They may have a proven track record up until IPO or up until going public, but they may not pan out. There's a lot of these tech companies that happen even today that this happens to. So if we want to visualize this, you can take a look at this classic box by Morningstar. I'm sure you've seen this either in your 401k or in your fund at work. You know, this box is like your typical classic categorization of different types of stocks. Obviously, this isn't 100% granular, but it gives you an idea of how these things are broken up. So if you look at the x-axis, which is on the bottom, you can see value, blend, and growth. We'll talk about those in a minute here. And then if you look at the y-axis on the right, you can see large, mid, and small cap. So you can have a combination of all these things, right? However, companies typically gravitate towards one end of the spectrum or the other, and sometimes you have some outliers, but this is a good way to think about it when you're looking at different companies to invest in. So how are these stocks categorized? Continued. We have growth stocks, we have income stocks, and we have value stocks. So growth stocks have big potential for growth. So these are typically companies that are outpacing the market. such as Amazon, Facebook, Microsoft. They typically offer low or no dividends, however, because they're reinvesting their retained earnings into the things that we talked about.
Jack, I'm always watching, Jack, alright?
Research and development. It could be things like
Just know that, skeleton. God, why is there so damn many of these segments?
Advertising or marketing. Then we have income stocks. So these are stocks that pay a regular dividend payment or a regular income fee. So think of GM, think of Walmart, think of Verizon, think of utilities companies. These are companies that have been around for a long time and have the ability to balance sheet to pay a dividend. So they typically have a proven track record or business model, and they have consistent increases in dividends over time. If you want to learn more about my own dividend portfolio, you can click on that link once you download this presentation. The presentation download link will be in the description below. And then finally, we have value stocks. So value stocks are perceived to be trading below their fundamentals. So think of something that's on sale or that's cheap. Typically, as value investors, we look at price to earnings ratio or price to book ratio. All these ratios that we're going to talk about later on in the video. And typically, what we're seeing is companies that show value. You know, the puppy that no one wants to take home at the shelter, but it could end up being the greatest dog in the world or the greatest companion in the world. That's kind of like easy analogy, right? A lot of people see the fleas and they see the fleas and the worms and things like that on the dog, and they don't want to take it home. But once it gets out, being the best friend. So continuing on how stocks are categorized, we have stock sectors.
Ready to go out and kill him?
There are 11 broad-based sectors. These are areas of the economy in which businesses share a product or service. So we have energy. This could be your oil, gas, coal, fuel, things like that. We have materials, which are chemicals, metals, paper. Industrials, which is your defense, your aerospace, your manufacturing. So think of like Boeing or Lockheed Martin, for example. You have consumer discretionary. This could be apparel, household products, things like that. Consumer staples, these are your foods, beverages. Healthcare, which is big pharma, healthcare equipment, financial M&T Bank, Wells Fargo, all these big publicly traded banks. Number 8 is IT, which is internet, software, and semiconductor. Sector so think of your Teslas, your Microsofts, your Apples, etc. And number 9 is
That did not go as planned.
So now that we're understanding how stocks are categorized, we need to understand What is risk? Risk is the chance that your actual outcome will differ from your expected outcome. So I'm little and I think that Tesla's going to go to 20,000 and ends up not doing that. That is the risk that I'm taking by going into that position. So risk includes.
Why does it allow you to burn the money?
All of your investment. So contrary to popular belief and contrary memes, especially at the time of this recording, stocks don't always go up. Okay, there's times when stocks do go down, and that is risk, and that's what you're being compensated for. So risk, as mentioned here, should be your risk. Investors were compensated for the level of risk we assume. So, for example, if I want to invest in a startup versus a savings account, I need to be compensated significantly higher for the amount of risk that I'm taking on for investing in a startup company, which has no proven, model or track record, versus just putting my cash in a savings account, for example, which is FDIC insured and a much safer quote-unquote investment. So there are different types of risk, okay? There's a million different definitions, a million different types, but these 7 I've highlighted because So number 1 is market risk. This is basically the market as a whole. So if you look at economic developments or other events over time.
Wait, how do you make the bone armor? Oh, I see now.
You remember 2008, some of you do, some of you don't. 2008 was a huge systemic risk, a huge market risk that crushed everyone's portfolio in almost every product type all across the board. Of course, I'm generalizing, but I'm just trying to prove a point here with market risk.
You only have to make one, or you have to make a bunch?
So the fact that, hey, I can't sell this investment. It's
Why
not
you
liquid.
happy?
Say you own a huge warehouse in the middle of nowhere, in the middle of a cornfield, for
I should be
example.
good on the bone.
You know, that warehouse may produce an income, maybe worth something intrinsically, but what if you want to go sell that warehouse? How many buyers do want to buy a warehouse in the middle of a cornfield? That comes down to liquidity risk. Can you sell this asset today? Number 3 is concentration risk. You have way too many stocks that are similar, or you have all your money just in one stock, that kind of a thing. This is your capital is concentrated so much that it's become a risk, meaning that you have too many eggs in one basket. Number 4 is credit risk. This means that the entity can't repay. So the company that you're investing in, for example, they can't pay off their credit, and which causes them to liquidate certain things or causes them to go out of business. Okay. This also applies in bonds, which I'm not going to get into in this video. You have inflation risk, which is the loss of purchasing power. I alluded to this earlier in the video. If you've been following my channel for a while now, I've been making multiple savers or losers videos over time. This is basically talking about if inflation becomes too low or if inflation becomes too high, you're literally losing purchasing power, okay? So say, for example, you have 3%, you're making 3% in the savings account online, which is laughable at the time of this recording. I'm just using this for an example. And then the cost of everything else is going up 5%, you're actually losing 2% a year in purchasing power, okay? So think about that. Number 6 is horizon risk. This is your investment that changes over time. Okay? So say, for example, your original plan on getting into an investment for 10 years, you have all the money to sell that investment after a year because you needed to fund that investment. This is a quick example that people can relate to. So your time horizon, if it changes, time horizon is a risk. If you think it's going to take 10 years for an investment to pan out, or 1 year for an investment to pan out,
Hit the bed.
and that changes, again, that is horizon
Oh, you
risk.
up there already?
Number 7 is foreign investment risk. So this applies to foreign investments. So say, for example, I want to invest in the hottest new startup in North Korea, for example, and that startup just gets crushed or whatever. It just gets put out of business instantly by the government for whatever reason. That is the foreign investment risk that I'm taking on by investing into that area or that country. Okay, so moving on, what are the types of stocks or equities, or what are we even buying here? So number 1 is individual stocks. So when you think of individual stocks, this goes back to
I'm one of
common
3.
shares or common stock that I talked about. So when you're saying, hey, I'm buying a share of Tesla, I'm buying a share of Microsoft, I'm buying a share of Apple, these are individual stocks. Okay? Number 2 is mutual funds.
I'm
I'm not going
AFK
to
at the
explain that here
moment.
because I'm going to go into each one of these in detail.
I'm 2 of 3
number
as
3
well.
is index
Let me
funds.
reset
Number
it.
4 are exchange-traded funds, or
I'm 2 of
ETFs.
3.
If you've
3 of
heard
3.
of that acronym, especially if you watched my channel. And then finally, you have REITs, which are real estate investment trusts. So individual stocks, this is, as I mentioned, these are your Walmarts, your Netflixes, your Exxon Mobils, et cetera, et cetera. These are individual companies or individual shares in individual companies. Some of the pros are that they have reduced or no fees to buy or maintain.
Ellie, you are all that matters.
Alright. I'm hopping off.
Alright,
I have to work tomorrow. But
These. There's no management fee to own them, meaning you're not paying a professional manager
kind of
to buy
upsetting,
or sell these
actually.
shares, and you're also not paying anyone to actually manage this investment for you. You are the owner of the shares. You have complete control and
talk to you guys later.
understanding, hopefully,
See you, man.
of what you own because you're researching, you're doing your due diligence, you're watching this video and sharing it with a friend, and you're understanding completely what you're doing when you invest in these companies. And then finally, the last pro is that taxes are pretty easy to manage. I'm going to talk about this in the last slide, but you have capital gains and capital losses. The cons to
Oh
owning
my
stocks
god, dude,
are
I
that
just
they're hard
jumped
to
off and fucking
diversify.
lost all mine
So if you're investing in one
that I had
individual
made.
company,
It's
you're
all like
exposing yourself
gone
to
now.
concentration risk, as we talked about. So you're going to need 20 to 100 different shares of stocks, not shares, excuse me, different companies to achieve adequate diversification. This takes more effort or time to monitor your portfolio because you're always looking at rebalancing, which we'll talk about. And then you're also doing your due diligence. You're reading 10Ks. You're reading, different financial reports, which we'll talk about in this video as well. You're doing all this stuff, burning the